The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is Election Day, need I tell you that? And in fact, it is the 6th of November. And very interesting. Market rallied. It's up 70. Dow's up 78 to 13,191. The S&P's up 5 at 1422. Combedex is up nearly 4 at 3,003. Gold is up 9 at 1693. Hit that. You remember I spoke about it yesterday. Hit the 200 period exponential moving average. That was the target we had. Now it's having a bounce. I call it a counter trend bounce. We'll see because I'll talk about some of the aspects that we're looking at very soon. Then you've got silver up 10 cents at 31. Platinum's down 1 at 1541. Now, high-grade copper is up at 3.48. It's up a penny and a half. Crude oil is up 90 cents at 86.55. And bonds are down only 7/30 seconds. I would have thought bonds would have been down a little bit more. So I had actually prepared some stuff that I wanted to do. I was going to do it yesterday. I thought today would be most appropriate. And I'm not sure I even want to do it. It was about both Obama and Romney. We've got hours to go before it, hopefully, it's all over one way or the other. I don't know if it makes it. I'm going to skip it. Let's move on to something more substantial. We'll talk about the market itself. That's what we're here for. So when I'm looking at the various indexes, let me just give you what I'm looking at. So I've been going through over the last 3 to 5 days the IYH, which is the iShares Dow Jones U.S. Health Sector Index, making a potential peak E if there's a lower high this month. It's trading at 83.81, down 15 cents. But here's the thing. It went to 87.11 in October of this year, October being last month. If there is no new high this month, it will make a peak, and that peak will be E. The MACD is still at 92%. That's very good. The MACD is still with a very wide beta as the 9 period. You'll see if you're looking at my charts here at Tiger TV. We say charts, and then I said to myself, "Oh, I forgot to put on my to go to TFNN Mobi 1. That's how you can see these charts. It's like I'm doing it now. I do it because I like to switch between the black background and the white background. I actually have a big preference. I'm now starting to favor the white background, especially for my subscribers to my opening call, because they can see the charts very clearly. They can print it out. They know exactly what I'm looking at. Not true. I'm also finding this very frustrating, because when I show a chart, I want to show the whole chart. I mean, how many charts can I give every day? I do an incredible amount of work daily for subscribers. Done it for 8 years. If I had to count how many hours I've put in, it's a lot of hours. I love it. So when I show the chart, what I'm really looking for is something that says, I'm not only looking at this particular time frame, but if you use the ChapmanWave methodology, let me give you a good example. So now, I always feel that I have to talk about the chart that comes up, even though I'm on another subject. Let me just show you the chart that comes up. The ChapmanWave is a waveform that never sleeps. Every single peak and every single trough gets counted. What's most important about this is that when you are looking, oops, there goes the sound. Let me just try and get that down. There it goes, down it goes. When you are looking at a particular chart, you want to identify the lowest possible low bar, and from that, you will find that it's very easy merely to count each successively higher peak and label it capital A, capital B, capital C, capital D. So uppercase going up, lowercase going down for the troughs. Now, what's even more important is that in the ChapmanWave methodology says you should go to, if you get a buy mode a buy signal that goes to a buy mode, you go to at least a peak D. You can go even higher to an E and an F and a G. But the concept is that I've just stopped counting. I must have reached, probably in the last month alone, I must have hit 300, maybe 400 peak Ds that I've been looking at in the charts. Oh, that's probably even too low. It's probably way more. I found one chart with a monthly that went 7 times to peak D. It only wanted to go to E, but it was out of those 7 times. It went to a peak D and then pulled back and started a brand new buy mode. In this case, the E-mini's 120-minute chart went from 1402 back in 23rd of October to a peak D on the 25th. Pulled back, went to a peak D, then it just popped a little higher to peak E doji on the 31st of last month. Pulls back, goes to another peak D. Just in this one example, I've got three peak Ds. And then at 1431, pulls back sharply, and now we've got a leg D going to the 200-period exponential moving average in the 120-minute chart. If you pull the E-minis back, they've gone to, from the low bar of the 4th of June, in the daily chart, they went to peak D, pulls back, goes to peak E, in the up channel, beautiful up channel. Then it goes to what I call the camel hump, double camel hump. It's just an expression that says that the stochastic made an arch formation and then made another arch formation and failed very quickly. And that usually takes you to the requisite E and F or F and G, and it just wraps it up. And in 1468, that's exactly what happened. 1468 was the most recent high. That was the high of the 14th of September. So now that I've explained that, let me go back to the charts that I'm looking at. When I'm looking at the IYH, you will see that there have been consistent up moves, and those up moves started back in July of 2002, 39.75. It goes to peak D, and then it squeezed to a doji peak E in February of 2006 at 65.96 from the 39's low, and then it pulls back, and it starts a brand new buy mode with a doji trough, just a single leg down in 3 sessions. In fact, 4 sessions, 4 months, and it starts a brand new buy mode and goes to peak D, and then squeezes to peak E. So, just in this example alone, I've shown you what can happen. Then it pulls back very sharply, and you'll see how this fits in politically. So 73.53 was the high in December of 2007. It slumps to 44.20 in November of 2008. That's 5 years ago. Wow. Is that correct? 4 years ago. 4 years ago. And then it runs peak A, peak B. I exclude that May corruption. Remember that isolated aberration, that intraday 1,000 points slump, what do we call it, rogue wave to the downside. I have excluded a number of charts. It's just, it was an aberration. Flash crash, thank you, Zital. And I'm going to put in flash crash so I do actually remember what the term is. We haven't used it for so long. It just slipped my mind. So flash crash, I should change the colors here. So flash crash, and then what happens? The IYH starts a brand new buy mode confirmation and goes to where? It goes to peak D at, that was in April of 2012. Pulls back for 1 bar, starts a brand new move to the upside, and then it goes to peak E right here. Now, the other peak E's are failed. Peak E once, peak E twice, and now we might have peak E. Now, I'm looking at this and I'm saying, healthcare did so well under the Obama health plan. So what is it telling us if it starts to slide? Well, we'll see, because we don't know. We will know very soon. But it's saying, hey, be a little bit careful here, because the weekly has made a peak E, so this could be a hat-trick top for the healthcare sector. And the daily made a peak E with a dreaded H formation after that failed to get over the 87.11 area. So I'm watching this really closely. Why? Because it could be saying that something else is happening politically, and that healthcare might be on the way out for now as we get a rotation into other sectors. So now I want to look at the XLU. The XLU, which is the Spider utility, S&P Select Utility Spider Fund, went to a peak Look at this. How many times can you get peak D? From the low of the 30 of October of 2002 at 14.90, fantastic move to 44.66 in the second peak D. First peak D, if you're looking at the charts, that's the monthly, October of 2005, and the next one was December of 2007 at 44.66, plummets by half to 22.48, 49.8%, I guess, correction, goes to peak A, B, C, then it goes to D at 34.30 in May of 2011. And then what does it do? It starts a brand new move and it goes up and it goes to, I'm calling this for now a G. It could turn out to be a C. And that's why I'm saying we've got to watch this really closely, because if the market is saying, be careful because it could be sector rotation, I want to see which sectors are going to be the most vulnerable. Now, I used to have a coal sector. And then you've got this dreaded H in the weekly chart that says, this is the level that 35.38 is probably the level that XLU wants to trade at to. The low so far today is 35.57. So it's almost there in the left side, right side price time match. How it handles that is going to be very important. So let's just look. We'll go to ACI. I haven't actually looked at it for a while. It was on my list of buys, and I just never got to it. We missed it. One particular day I featured it, but we didn't get it. It happens a couple of times in the ChapmanWave, in my opening call, Traders Corner. Sometimes we just miss a particular stock. Well, it made a peak F top. ACI is a coal company. It's called Arch Coal. And it went to a peak F top in the ChapmanWave. That's the sixth highest peak on the at 8.86 on the 22nd of October. Pull back, and it pulled back a big percentage, but at a small point, because it went from the 886 level to 713. So it's 1.5. So that's like it's like a 13% correction. Now it's in leg AB, but until it breaks decisively above 8.86, it's a counter-trend rally. But the weekly says, be careful. This is ABC, 86, yep. This is very interesting, because although it's a very small move in the ChapmanWave for an A to B to C to D, it is saying a higher high above that 8.86 level, and that starts leg C, and that starts to improve the monthly chart. So you see what I'm trying to do? And that's what we're doing with subscribers. I'm picking out the areas that I think are the weakest, trying to short those stocks. We have some nice shorts going on. I'm also trying to add shorts a day. If they can only get there, one might get there. At the same time, I'm looking, and those are some of the very best, the biggest winners of the last 2-3 years. Those are starting to look somewhat vulnerable. At the same time, on the upside, what I'm looking at is that there are certain sectors and certain stocks that, to me, are acting quite well. I'm going to tell you one that right now I discussed with Steve Rhodes recently, and that was UTX. UTX is having a very nice session. The weekly chart needs a lot of work. So does the monthly. We'll be back, 877-927-6648, straight after this message.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. This is the Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday. Don't forget, straight after me, you have Victor Jones talking about options. Everything you wanted about options. It's a fabulous show about options. And I've had a number of calls recently with folks looking at option positions, and I'd recommended that I will do the stock analysis. I'll talk about the option analysis, but the real expert with the options, of course, is Victor Jones. So with that said, I was going to talk about UTX, but I had a quick email from one of my subscribers and one of my master trader attendees with a question on CMI, which is Cummins engine. He had a really great trade. He identified in ChapmanWave a terrific buy signal that went to a buy mode based on the 120-minute chart, followed it up with the daily chart, and you can see what I'm showing. This is the 120-minute chart. Look, from the trough, that's a plus sign that can go to an up arrow. From that up arrow, there was a peak D made from the low in Cummins engine CMI trading at 100.82, down 18 cents. There was a low on the 11th of October at 3:30 in the afternoon, and it was at 85.88. From that moment, you can count each successively higher peak, and it takes you a peak D right there with a big candle on the 11:30 on the 22nd. Then it starts a brand new buy mode. I'll just change that so you can see the color a little bit clearer. I'm not sure if you can. Let me see if I can make that clearer. There it is. Okay. So it's a brand new buy mode by signal, that is, on the 23rd at 11:30 in the morning at 91.45, and it goes to peak ABCD. Then it pulls back. Only 3 bars. The 4th bar breaks out, starts a brand new peak ABC, and it's in leg D now. The question is, what do I do now? Because this does have quite a lot of volatility. Also with the market. Now, I'm finding this really interesting. We've got the election coming up. The market is doing a little anticipating here because it's saying there's movement in UTX, which is really a biggie in the economy, United Technologies. And now you've got Cummins Engine, Cummins Inc., moving very nicely. So let's just look at this. The left side high in Cummins was at 104.71 on the 14th of September. It pulls down and it comes down to a low of 85.88 on the 11th of October. A left side, right side price time match with a ChapmanWave inside wedge. Let me see if I'm able to draw that so that it actually comes out right. Right there. There it is. With a ChapmanWave inside wedge says that Cummins by the 9th, by Friday at 4 o'clock, should try to get to the 106 to 1, no, I'm not right, to the 104.71 area. 104.71 was the high made back on 104.71, was the high that was made back on the 14th of September. It's at 100, made a high today of 101.50. Very close. It's in leg D. Can it do it? Well, the MACD is good. The stochastic is good. It's saying, I don't know about you, but I don't care who comes in because CMI, at 100.91 is in leg D up, and the stochastic's at 93%, and the MACD is still good. So even if there was a sharp pullback, you'd have to watch 98.56. And then the doji, the Roman candle of yesterday, with the wick down to 97.25, which of course is a pretty steep pullback, 2.5, 3 points in a very quick time period. But it also says, wait a minute, my weekly chart is making an arch formation with the stochastic, where the technicals are pointing upward. Not great, but pointing upward. And the price is getting closer and closer to the left side high of 141.71 I was talking about. And the major high at peak A at 105.63. So far, if the market closed right now, I'd be looking at it, I'd be saying, hey, this is very nice action. Yeah, it's not very much today, only 0.04, but it does suggest that it could go higher. As long as there isn't a big downside smash tomorrow, CMI is acting very well. Now, what do you do in terms? I would do this. I'd put it, by the end of the day, if this market is still holding well, I would take off just a little bit to reward yourself for being patient to get to leg D in the ChapmanWave, and then you are ready that if there's another move to the upside tomorrow, you're in the position. And if it pulls back sharply, you've taken some profits, and you know pretty much where your support will be. 98.56 is key support. If it goes underneath that, it's probably going to go to 97.31. But so far, this is very nice action. Basil Chapman, Tiger Technicians Hour, 877-927-6648, 727-445-1044 overseas numbers. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And let me say thank you to Harmony Gold for sponsoring the section. And let's go back to the market. I'm going through a couple of the IBD stocks, the top stocks that were there for the past, this last weekend. So when you look at number one, which is DDD, one of my favorites that I don't think we've ever owned because it just keeps getting away from us. 43.68 right now, up 92 cents. 3D Systems Core, very powerful candles in 2012. Look at that. This is leg F/C in the monthly. MACD's very strong. Stochastics holding at 84%. It was actually up in the 90s. Now it's at 84. Potential leg D or peak D this week. In a counter trend move in the technicals, price has gone to a new recovery high, made a high of 46.23, and a D, a peak D. I'm calling this a phantom peak D. Now let me explain what I'm talking about. I used a phantom peak on the way up here. That means I had two parallel highs, and then the third bar was higher than the two parallel high bars. Hardly ever do I do it in daily charts. Hardly ever. But there are times where to be safe, it's better to be ahead of the sequence in the Chapman wave than to be behind. And what have I done? I've taken the low in DDD on the 26th of September at 32.35, and I've said it's got a peak A, B, C, and now it's in leg D instead of leg C, which is technically what it should be at. But the stochastic has pulled back under 80%. The MACD is still very strong, and it says there's still internal strength. all I'm doing is I'm being protective. I'm using, say, the 9 EMA as a barometer. If it breaks under that, I would want out. If I was long, I'm not. But I'm looking to see, is this a stock that I'd like to get in? Because then there could be the real peak D that goes above 46.23 as that fast-moving average, the yellow line, remains very positive. And that's key to my work. Well, how do I look at the different moving averages? How do you use them? If it starts to break down from here, it means that I was correct in being ahead of the game. Breakdown means that it probably closed below 41.25. And that'll happen pretty soon. So far, it's acting very well. So good. For a change, we've got number one on the Investor Business Daily, top 20, doing well. Coors. Coors is Michael Coors Holdings Limited, trading at 55.60. Here's something a little different. Although the monthly is only in leg B, the weekly chart has gone to a peak E if there's no new high this week. Stochastic and MACD are good, but they're not, the price has not responded by pushing to new recovery highs. That takes me to the daily, and the daily says, you know what, it needs a little bit more of a rest. It went to a peak recently at 58.62. It needs a little more time to pull back. So I'm looking at all these stocks. There's DDD, Coors, TDG, which is TransDigm Group, CVLT, Comvolt, CTRX, Catamaran Corp. I'm looking at them and I'm saying, okay, they've had a bit of a correction. There's a chance that if they reignite now that we've got a new set of leadership participants, that could be very good. That's the reason why in my opening call, we are long and we are short. I'm quite happy looking at short positions. I'm quite happy looking at long positions. So we're going to go to our first caller. We've got Mark in Denver. Hi, Mark. How are you?
Good, Basil. How are you?
Very well, thank you. You'd like to look at?
I'd like to look at Ford. Let me tell you what position I'm in, which is a really good position right now. I got into some November 17th calls. I have the 10. I got them for all of 36 cents.
Oh.
So I got out of a third of my position and got my money back. And now I'm riding about 42 more of them. And I'm trying to, it looks like it's just making a peak D today. Are you seeing that too?
This is one I spent a little time on. If I count it as a fresh buy signal from the low, you're going from the low of the 2nd of October at 9.71?
Yes.
Then this is A, B, C, and today it's in leg D.
Right.
And I'm inclined to say that would be the best way to think about it, because the move that went to 10.66 on the 19th of September, I call that peak C, and this made it, I almost had the pattern that I call the overlapping wave. It just missed it by a penny, 10.28 on the 5th of October. The move that rallied back to 10.26, so I missed it by a few cents, by 3 cents. The move that moved back to 10.26 on the 11th and the 12th, if that had just gone a couple of pennies higher, then I would have had an overlapping wave. And that says not only could you go to D, but you could go to a very sharp D, and then you've got to be careful because you could be pulling back, and that pullback could take you back to the lip. Well, in this case, the lip would be all the way down at 10.58. You wouldn't want that.
No. So I've got a week and a half on the rest of my position, and it looks like, to me, and if you look at it from Tom's scenario, if you're doing an ABC app, it looks like it went from 882 to 1066, back down to 970-ish, and then it broke to the B point out. So I'm looking at 1165 to 1204 as the target, but I just want to make sure I'm not going to, if I get out here, am I leaving money on the table here before a week and a half? Let me explain what's
very important about the stock, and I'm talking about it from bitter experience because we had it and we got stopped out, and I wanted to keep it. I thought this is a great time to get it and hold. I didn't get, well, we've got others that are working, but it would have been great to have had this one. Now, what I'm looking at is if you look at the weekly chart from the $8.82 low of the week of the 3rd of August, that leg to A, then the pullback, then the expanded leg to B, a longer one, and the pullback, And now the expanded leg to C, each one's getting stronger and bigger.
Right.
To me, this is saying, that's why I didn't want to grab positions in the indexes to go short or long just arbitrarily right now, because I still see internal strength in the rotational aspect of this market. And I'm saying to myself, if General Motors and Ford are acting well, and I have to tell you, Consumer Reports just slams Ford.
Right,
for the quality's gone down. It was way up, and the last year it's just they've had some terrible problems. Plus the electronics of the voice controls, not good. And yet look at the stock. So this is really good. It is in leg D. Now this is what I would recommend to you. I would. The best, obviously, is to hold it, and it runs all the way through to $11.85, $12.23 a week from Friday, right? That's what you'd really like.
Yeah, that'd be great, but I don't want to also let it run back all the way to 11 or whatever.
Right, so you want money management. So here's my when did you take some off, right? Just now, today, or before?
No, I took some off like last week when it was around that triple. When I had a triple, I took a third off.
Okay, then this is what I'm going to recommend. You could either do it at the end of the day today, or it doesn't even have to be a third. Take something off, because you've got a fabulous move in this, and you can't expect, it might happen, but you just can't expect that it's going to continue like this. My suspicion, I spoke about this recently, is that a Ford is low enough that many fund managers, if it starts to work and it broke out, I think I said if it goes over 1081, there's a real good chance that fund managers are going to be forced into it. And so this is what I'm going to say to you. Towards the end of the day, just with the risk of something else happening tomorrow,
right,
I would take a little bit more off.
Okay.
Now, the beauty of this is that if there is a very sharp pullback tomorrow, you've got so much support at the low of yesterday at 11.13 in Ford, and you've got so much support at 10.95. You don't want to see it go there, but there's so much support that you'd be able to reorganize your thinking to be able to add back, or at least to maybe reposition for another rally if it starts to show support there. Because the MACD and stochastic are very strong. My target for this would probably be the high bar of 1204. That was the week of the 27th of April as a potential. That's a potential. Now, this is the other thing that I would suggest that you do. If it runs really sharply into the close, you could say, you know what? If it gives back 30 cents at the open tomorrow, I give back quite a bit. But if it's up 30 cents, that's spectacular. So I don't know how you want to handle that. I would just be very prudent. You know, you've got a real good eye for this. If you can keep having moves like this for the rest of the year, you don't have to be greedy. You can just have a lot of patience, treat it like a triangle. So you've taken off 1/3. I would probably say to you, you could take off if it runs into the close, or even 3 o'clock if it's acting really well. In fact, right now you're probably going to get about the best premium of the day if it doesn't go much higher.
Right.
So think about taking off some, and you can say, you know what, I'm going to give myself a treat that last third. I'm going to leave it for now. If tomorrow there's a very sharp pullback, and by noon the market's not coming back, but staying down sharply, you can just exit the rest and wait very patiently for $11.15 to $10.95 to try to do the same thing again for a week from Friday.
Yeah, just run up another 5 cents while we've been talking, so not bad.
Yeah, that's what I'm saying. So you don't have to, it's an option. You can't really run a stop. You really just either get out or not. So make a mental note. You've done fabulously. Before you start patting yourself on the back, you know my expression, when you take your hands off the wheel to pat yourself on the back, that's when you hit the tree.
Yes, right. Been there, done that many times.
I know, that's how I got the expression.
Every time I want to tell someone how well I'm doing.
Oh, man, isn't it amazing? It's called hubris. It's just absolutely hubris. So anyway, thanks so much for calling, and congratulations. Fabulous move.
Thanks.
Thank you. Let's go to Kevin in Sacramento. Hi, Kevin. How are you?
Good, Basil. Thanks for taking my call.
Oh, it's my pleasure.
That hubris works in golf as well.
Yeah, and everything. Believe me, I did it in tennis. In fact, this summer I was bragging because I was serving and playing the best I've ever played. Of course, now I've got my shoulder problem. I'm just barely serving, but I am playing. So you wanted to look at?
CF Industries. I don't have a position in it right now. In the past, I've sold puts on the position because it's a relatively strong stock.
Yes.
And I was just looking at if that was smart to do again, or just what you see in that.
Okay. Well, first of all, CF is CF Industries Holdings, and I've got a feeling that Kevin would like to be saying, if I dropped the C and I just had the F, I would be having Ford, and it's acting fantastically.
Right.
Okay, this is what I'm going to suggest. We don't know how the market's going to respond. Now the Dow's up 148, the S&P's up 12, a real squeeze going on here. And one of the reasons why I still wanted to stay in my long positions, and at the same time, I'm looking for some shorts. One we just picked up a few minutes ago. We'll see how that's going to work out. But what I'm going to say to you is, if at the end of the day, CF is closer to the high at 208.80, you could start just the smallest position. Why? Because if tomorrow let me just explain my reasoning before I say that. The monthly chart has made a peak deep, but it's holding the 9-period moving average very nicely. The weekly chart has made a peak E, and the technicals are very poor, and says that it should rally. It should fail somewhere around 211 to 214 if it gets there. It's at 207 right now, 207.39. If it gets there and make the H formation and then come back and retest and maybe go lower. That's what it's saying, but it hasn't done it. That means to me that I'm just thinking that if tomorrow's a really lousy... Look, we're up 147. Do you realize that tomorrow the market has to just say, oh my God, this is horrible, to give back 150 points. So if it does that, then CF Industries probably will fall, and where will it fall? It'll probably take out the low of 205 round number this morning. But what if there's just a neutral response? The big move has been made. Now it reassesses the market. Some stocks move higher. I'd be inclined to wait a little bit. It would be perfect if you shorted it today and tomorrow there's a lousy response in the market. CF Industries comes down. You got the high for this move. But the way it's acted, I think it's trying to go, and I think you can see it as well. It's really trying to get to the high of the second, that's 210.28, or even the high of the day before, 211 round number. So I'm going to recommend you hold, because you really want to bounce to be able to get the best price, correct?
Correct.
Yeah, so I'm going to say to you, you might miss something tomorrow, but you know what, if you miss it and it starts to come down, you know that it's got tremendous resistance then at the high of today. So you know exactly what's going on. If it starts to break above it, you've got to be careful. I'm going to say have patience. And the only reason why I'm saying it is it's had 5 weeks, 6 weeks of decline since the last rally attempt back in the week of the 5th of October. I think you've got time on your hands. So I think you've got the right eye and you've got the right stock. I would prefer if it was just a little higher, 207, not a little, maybe 6 to 8 points higher. That's when you got the perfect opportunity. So just hold off, and if it starts to tank tomorrow and you want to nibble on one position or a small position, that'll maybe be the first one. Second one will be at 211, the third one will be 212, and that will be it. That's the way I would look at it. Hope that helps you.
It does. Basil, if you don't have any more callers later in the program, can you look at Cirrus Logic? And CRUS. I've got callers. You know what? I'll do it as I'm going to the break. So thank you so much for calling. I'll try to get to it. Oh, it hit the 200-period moving average. Going to have a little bounce. I'll talk about it later. So we're coming right back with Ben and John straight after this break. Dow's up 146. S&P's up 12.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. We've got just a short while. I'm going straight to Ben in Tallahassee. Hi, Ben. How are you?
Great, Basil. How you doing?
Very well, thank you.
Excellent. Hey, can you please confirm that IWM is still in peak C and what you think things look like from MACD? Because I haven't looked at the chart today. I didn't know if it accelerated.
Which time frame are you looking at?
On a weekly?
Yes, on the weekly it's an F/C. Now the pullback that's occurred almost took out the most important low, which would have been around about the 80 actually would be the level. It went to 80.43. If I took that out, I would have had to say, you know what? Everything about this says fast-moving average, MACD, stochastic pulling back. But the fast-moving average has actually started to flatten out, which is one of the reasons why I was very hesitant to try to go short any of the indexes, etc. Now the question here is, and Adamant in the Den asked, will we get to D? I think it's the same question. You know what I'm saying? I believe that there's going to be a lot of resistance. I love the action of the daily because the MACD and stochastic are turning around. All I can say to you is, if tomorrow, regardless of because of what happens in the market's response tomorrow, if the IWM closes under 81.90 by tomorrow or Thursday, that'll say failure pattern. And I'm almost certain that I'm going to have to put an arrow down on the peak F and say that's it. But this is what would change it. If by Wednesday afternoon or Thursday it's getting even close to the candle high of 80.95 on the 2nd, just a couple of days ago, if it gets even close to that tomorrow, that will say, no, be careful. There's still internal strength because the stochastic will move from 36% to about 39 or maybe 41. And then for the first time in weeks, the MACD will have crossed positive in the daily chart. That leaves the weekly chart to be repaired by the daily chart. So my parameters, I'll be very clear. A close under 81.80 by Wednesday afternoon or Thursday afternoon. Today's Wednesday. No, today's Tuesday. Wednesday afternoon or Thursday, that's very negative. If very negative, meaning on a daily basis, not the weekly yet. I have to wait for Friday. But if there's even a rally, the high today so far, 82.42, even if it gets to 82.63 by tomorrow, even if it's moving up tomorrow but not greatly, I think that's a very good sign. And then what we'll be looking for is a cup formation in November towards the top of the weekly chart, but I have to go one day at a time. This is just the first big move we've had, and all it's done is not even gotten back the big, huge smash from the second. So I'm looking at this and I'm saying that's the candle. If there's a break above 82.95, it doesn't have to close it. If there's a break above 82.95 this week in the IWM, very, very positive. Hope that helps you.
Good. Thanks a lot, Basil.
Thank you very much. Let's go to John in New York. Hi, John. How are you?
You good, Basil? How you doing?
Very well.
I was going to ask you about silver, but really I am in the ZSL, so I'd like to have you take a look at it.
Okay. The ZSL is perfect. The ZSL, folks, is the 200%. It's the ProShares Ultra Short Silver. I've got a peak F top here, but I don't yet have the MACD turning down, and the stochastic's at 82%. My suspicion is that there's going to be a pullback in the SLV. There's going to be a bounce, a little further bounce in silver. The big level to watch in silver, which is trading at SLV, is trading at 30.43, is 30.78. And the same thing happens in the DZZ.
You're going to say a pullback to 30.78?
No, a push up in the SLV. So the ZSL, if you have a position, I would take a little bit off right now because the DZZ is also the same thing. I've got a peak in it's pulling back. Just a little bit off.
What would be another entry into ZSL?
Yeah, exactly right.
What would
Thank
be
you so much. Where would the entry be at about 4? Oh, wrong one. Oh, we ran out of time.